We're here now anyway. So my name is Paul Varko. I've been a trader since 1987 when I started just after or just before the big crash on the floor of the London Stock Exchange. I was a trainee options trader, and 2 years later I was head of options in my firm and teaching people. And teaching people has always been something that's driven me, and so as a result, here I am teaching. Now, the other person in the picture is Lewis Daniels, and so between us we make up Mayfair Trading and Mentoring. And what we want to do is take traders to the next level. Okay, so we're not about teaching you, how to what a pip is, what moving averages are, and stuff like that. That's not what we're after. We're after the next level. So what we're going to do is take you through. Well, Lewis is going to take you through, and I'm going to translate. Okay, because Lewis knows an awful lot about these things, and he kind of tends to assume that everybody else knows as much as him. And I can tell you, for one, I do not. And I will be stopping him if he breaks the law, as far as I'm concerned, and talks about stuff that you guys may not understand. So it's a little bit about Lewis. He started trading in a school at 15 and started trading almost immediately, and has been training people since about 2012. And he believes in education as well, and he knows an awful lot about Elliott Wave, Wyckoff structures, and COT data, and that's kind of what we use. Hello there, Similar Rice. Nice to see you. I hope you can hear us well enough. I'm just going to type hi there to him. And okay, so over to Lewis. So I've introduced with a massive fanfare as a person with very, very little education and an awful lot of knowledge. So let's go.
Yeah, cheers, Bob. So obviously, guys, I'm the person, I guess, behind the Mayfair profile. Ultimately, we've said this stream was going to be about New Zealand dollar, US dollar. As Paul's just mentioned, one of the key components for my trading, for our trading as Mayfair, is actually Elliott Wave and Elliott Wave structures. So obviously on the 11th of April, just gone, I actually posted 5 or 6 pairs showing the current structure on weeklies and monthlies in terms of where we've started from. So I wanted to kind of dig a little bit deeper in terms of what we see and kind of why. So obviously from a monthly perspective, just kind of breaking down some of the obvious, and I'll hide the stochastic for now. But ultimately what we've seen kind of on the monthly is that the 3 is actually not quite complete, as we posted on the 11th. So we can move the 3 up a little bit. 4, we're not actually in 4 yet because we still haven't completed, obviously, for 3.
So I'm going to stop you there.
As far as I'm reading.
I'm going to stop you there, Lewis. So obviously this is Elliott Wave stuff. Now, if you guys don't know what Elliott Wave is, stay with it. But I'll just give you a very brief introduction. Elliott waves, when you're in one, they have a wave up, a corrective move down to 2. So that's 1 is the wave up, corrective down to 2, another impulse wave, which is where it goes all in one direction for a while, to 3. And what Lewis is saying is he's identified on a monthly the 1 and the 2, and he's waiting for the 3. Okay, carry on, Lewis. As I say, I'm translating because I am aware that some of you will not have followed Elliott Wave, and we do look at it a lot. So do some research before the next stream, and it will be beneficial to you. Anyway, carry on.
Yeah. Okay. So in terms of 3, obviously, although we've had this kind of pin bar high and coming back down, we now need to kind of drop a level, which is what I like to do. And I'm going to take this down to this candle and drop down to a weekly time frame and start looking for patterns and extensions within this level. So again, I'll just drag these numbers being obviously the monthly, which we say are not yet complete, 4 completely out of the picture for now, and obviously 5, nothing to discuss. So on the weekly pattern, what we're looking for is basically a fractal Elliott wave within the current wave structure. If we assume that we had a 1 pattern or 1 move on the monthly, what I'll do is I'll drag this down on the monthly without having too many lines and bits and so on the chart. So from this particular point, I'm now looking to see whether or not the weekly 3 has actually been completed. So a quick tool for this, I use the Fibonacci Extensions. I like to stick the magnet on so it's pretty clean. And the idea is taking, for me, the swing low. I like to go 2 to the left and 2 to the right. So the first candle for me with a big high would be this one, and then coming back down to the 0. I'm actually looking for the 2618, which obviously we can see has just been taken on these candles there, and again on this candle there. So that's enough to confirm for me that this is basically the 3 on the weekly. And now what we're looking for is a retracement. So again, from the extension into the fib retracement, I'm looking for the low of the 2 up to the high of the 3. I'm basically looking for confirmation around the 38% mark, which is why I've got this one in orange and the rest of it in grey and white, is that this one could potentially give me the 4.
Lewis, could you stop a sec and just take away the, well, hide the 2.618 that shows the 3 so that people can see the retracement. Okay, so now we're looking at the retracement, and what Lewis is looking for is for it to reach that arrowed line to be a full retracement. Carry on, please.
Yeah, so obviously that's kind of good enough in some regard. Obviously we know that we've got a monthly uptrend still being formed. We now can see that we're in a weekly pullback. Obviously within that weekly pullback, I would say this is my 4. Now I can actually zoom in another level, another layer. What I'll do before zooming in, I'll give the 4 low being this one and drop in again. Obviously trying to keep the charts as clean as possible, as easy to view and as easy to follow.
Okay,
so ultimately what I'm looking for.
Again, I'm just going to elaborate here for those not familiar with Elliott waves, is that they're fractal in nature. What this means is that if you identify that you're in an impulse wave, which is wave 3 or wave 5 or actually wave 1, but we don't really look at them, then you should be able to break that wave down. And that's what Lewis is doing. So he's broken the monthly down to the weekly, and now he's going to break the weekly down to the daily and look for similar patterns. And this gives you a really great insight into what's really going on at every level. So it means that you don't get in at the wrong level. So we'll go into how you don't get in at the wrong level right now.
Yeah, so basically if I add some kind of text on this, I'll make it a bit brighter so it's easy for everyone to see. Then basically what I'm saying at the moment is the monthly 3 equals still forming. We have a weekly weekly 4 now complete, and now into the daily, which obviously right now I'm still working on. So that's currently where we are as a whole. And again, what I'm looking to do is to take what I like to call 0. So I'm going to look for the low. It's either this one there or this one there. Let's assume that it's this one. I'm not being too fussy at the moment because I'm still up on a major swing. So what I'm looking for is, again, the same Elliott kind of moves, knowing some of the rules, which again is something that we go into in a little bit more depth with the mentoring, is knowing that we're looking for the rules, knowing what the rules are likely to be attracting in terms of the next levels. I'm looking for potential areas. So we've got this move up here where there's a little bit of liquidity sitting. And the idea now is using the Fibonacci extension tools to actually forecast where potentially a 3 within the weekly 5 move is likely to be.
And what he means is we're looking at the daily now. So we're in a weekly 5 move because you can see the weekly 4. And so that means we're in the 5 move, which is an impulsive wave, which should in itself contain 1, 2, 3, 4, and 5. And what Lewis is trying to do is work out whereabouts we are in that wave. Now we know that we haven't reached the end because we know that the previous high, the 3 from the weekly, will indicate, you know, we will get at least that far, if not further. So carry on, Lewis.
Yeah. So again, one of the other rules that I like to follow within Elliott Wave is extension levels tend to be in relation to the 618 level. So you tend to find the 1618 the 2, 6, 1, 8, and as you can see from the way that I've structured my extension levels, I've actually made the 618 levels slightly lighter and obviously a bit darker as they get a little bit higher. So what I have there, and the reason that I've put the arrows on each of these, is that we can actually see the zone that I've taken for the liquidity to give me a 5618 extension, assuming we have a very, very short, rapid 0 to 1 and back to 2 move as a whole.
And what he means by that is that you cannot always be certain that you've got the right 0 to 1 to 2. We've written one in, but it could work out that we'll revise it later. Am I right in saying that?
Yeah, exactly. So the idea as a whole, Paul, is that I'm looking for, obviously, knowing that the monthly trend is up, knowing that we've got a weekly trend down to this 4. And obviously we are now in a weekly 4 to 5 move. I'm now looking for the potential extension levels to give me a completion of 5, which will actually give me a monthly 3. If that makes sense.
It makes perfect sense to me. So we are analysing the monthly 3 in terms of weeklies, and weekly we're at 4. No, monthly. Yeah, weekly. Beg your pardon. Weekly we're just working out where we are. We're possibly coming up to 3, but it's also true that it might come back off down to almost where the 4 is, and that could be our 1-2 move. And we're not certain until we get there. We do have a 1-2 move, which is very, very fast right at the beginning near where the big 4 is. But we got to wait and make sure. And using these Fibonacci levels means that we get a much better idea of whether or not, which area of the wave we're in. And it's not always obvious. But right now, if it retraced back to almost the 4, then that would probably be, we would say that's now 1 and 2, and we'd wait again for 3. Anything I've said that's wrong there, Oguru?
No. I think for me, like I said, what I've done over the last, maybe 14 years or so trading Elliott Wave, it is ultimately I've tried to simplify it and simplify it and simplify it. So, there's actually a joke kind of in the Elliott community that you can ask 9, 10 Elliotticians, kind of where they would plot their 1, 2, 3, 4, 5 moves, and you'll actually get 9 different answers. So I think for me, it's kind of taking out a lot of the noise. I start usually on the monthly time frame, weekly, and as a swing trader / investor, I tend to look at the bigger time frames anyway. So the levels are less fussy for me, but obviously the principles are the same regardless of the time frame or the level.
Fine. Okay, continue.
Okay, so knowing that we are currently in the weekly 4, so if I change this color and turn this into, say, green, so we got a green weekly 4. I'll put the top one as a blue 3 for the month. So in theory, what we're now having, I'll draw this kind of 1 in 1. So we have the monthly move, something like this, and what I'll do is I'll add the line for the seconds. So within the monthly move, 3 is usually the greatest, or always the greatest. This has actually happened this way. So if we assume that this is our monthly, and what I'll do is I'll make this the same color as the monthly there. So knowing that we're currently in this monthly move from 2 to 3 right now, what we then have is the second part, which gives us the 1, 2, 3, 4, which will create the 5. We'll drop that down 1 level and turn that to green, which has given us the weekly. And therefore, where we are right now, this level there equals this level there. So what we're saying is that right now, in the overall cycle, this is where we currently sit.
And that basically means that we are not interested in selling this pair right now, and instead we're waiting for the right moment to get long it. Okay, and that doesn't mean it's here. It's all too easy to say, well, we're at the 4, let's buy. But there's more to it than that.
Yeah, so obviously knowing that this is still on a daily time frame, we've obviously got the overall trend direction and bias is up. So we know that we want to be bullish this particular pair. We know that within the wave on the weekly time frame, we are actually only now starting to travel very slowly up to this channel. So if I had to put maybe a guess in terms of where we are right now, I'll put this as a different color once I got it. We are now currently in this position, which is equal to roughly there. So zoom in again, and what you'll find inside this move, you will actually see another pattern. I'll change this to maybe orange and drop that down to 2. And basically what you'll see is that this pattern now is basically the beginning. So what we likely to see is a one move up. So if I was to draw these in, let's use the same orange. I'd like to say one move up, a rapid back down, 3, which potentially hasn't yet completed, 4 I'll put out of the way for now, and then obviously a 5 up to where I'm expecting that to finish. So I'll delete these so it's a little bit cleaner. Make sense so far, Paul?
Yeah, looks 100% to me. And so now we need to go down yet another level, do we not?
Yeah. So ultimately what I'm looking for, like I said, I put these out of the way, so ignore the levels currently on 4 and 5. The general idea is losing the extension. Before I go down another level, what I'd like to do is use the Fibonacci retracement, take this from what I'm assuming to be the 2. Let's assume that 3 comes in at the level that I'm expecting. Then ultimately the 382 will be there. And therefore, I'm looking for a rise up to 3, back down to 4. And then what I'd like to do is take a long entry once I get some kind of retest on this. And that's basically how I would trade this, obviously on a daily time frame. As you say, we can then step down a level. This time we move over to the 2. And then from there, we can drop down lower time frames. And obviously now the 2 becomes the low. And we want to be looking for the 1, 2, 3, 4, 5 move before we get to the end. So again, same 2 tools. I'm going to be looking for the Fibonacci extension. I'm going to go 2. I personally like 2 to the left and 2 to the right. So I'm going to say this one for me is good enough. And therefore my first extension. There's a little bit of a consolidation there, which gives me a little bit of concern in terms of a pullback happening right now. What I'd like to do is, on an occasion like this, I would be measuring the price range of the 2 move, which that's actually, just noticed something on that by doing it. Sorry, I've spotted that myself already. So in theory, the 2, because we've got a breach of the previous wall there, I'm actually taking my 2 up to this level and coming back down to this being the 2. So at this particular point, what we're looking for is the first move being the 2,618. And then from there, expecting a pullback on the retracement. So 2 there, up to the 3. And then the next entry level in around this on our 4-hour entry. So if I draw this in as a path, ultimately what I'm expecting is a move up, a move down, and then a completion up to 3 in the 4-hour time frame.
Okay, so what we're basically saying is, and this is the lesson for today, is there isn't a trade here now, but we know which one we want to do if things move as we expect. So if we do get the rise up, the very slight drop down, then that is interesting to us, and we'll be looking to take a long position. And so while I hesitate to say here endeth the lesson, what I mean is what we're trying to do here is show people when not to trade, because this is also extremely useful as a technique for telling you, yes, you want to get long, but not now. Because how many times, everyone's done it, I've done it, I'm sure Lewis did it right at the beginning. You're right, you get long, you get stopped out, and then you were right. It's ridiculous how often it happens, and that is the difference between knowing this much and knowing what we knew then. We had a situation where we were basically part of the 78% that lose money, and what we are trying to get everybody into is the 22% that make money, and they're the ones that watch this sort of data. Now, we do have a Discord server. You can see it in my SIG at the bottom of this stream, and you can get some pretty good free information on there. And if you want to subscribe, feel free to subscribe. You can get a flavour of what we look at. Someone just asked in the chat, do we do BTC and so forth? Yes, we do. Lewis is very interested in coins and altcoins, all the coins really. And so, very, very well worth looking at some of the stuff he's written. If you go to his profile, which is Mayfair_Ventures, you'll see even more stuff. He's got plenty of editors picks and so forth. You'll get a real flavour for the amount of wisdom he has in this area of the market. And it's well worth reading through what he's written and saying to yourself, does it make sense to me? Because, if you can get on the same wavelength, then that's great. Now, as I said, go to the Discord server. A lot of the stuff's repeated there, as well as on TradingView. And then if you want to subscribe and see even more in depth, the next stuff that the subscribers will get is where we go to next, which Lewis is we start to look at Wyckoff structures once we've got our signal. So we wouldn't do that today necessarily, because we haven't reached the point that we're looking for to take this long. So this is a long we are looking to take. Now, we could be put off it by price action. That can happen. But if it does what we predict, the next step will be Wyckoff structures, and we also look at COT data and order blocks, and those are the stuff we kind of leave. They are the next level, and that's why we ask people to subscribe before we talk to them about those things. So, unless there's anything else you want to mention, Lewis, I think we can draw this to a bit of a close, and we'll say that. And there's a question there from Aranak. What is your TP on Euro USD short? Well, that's an interesting question. However, in general, I think Lewis would agree that Euro USD we think is going up. Now, it doesn't mean you can't make money being short it right now, but one of the analyses we've been looking at within the subscriber area is Euro USD, and one of our subscribers has been on a long trend for 300 pips so far and looking for more. I don't know if you want to elaborate a bit on that, Lewis.
Yeah, so obviously, I think the problem is, with having, I guess, kind of blind questions without any kind of knowledge of, entry points and all that kind of stuff, is that, we could all be in the same trade for a different period of time. We've all got a different risk appetite. We've all got a different, idea in terms of time frame, full-time jobs, full-time investing. For me personally, I like longer term trades. So I think it's really difficult to say, kind of this is the number in, this is the number out, unless obviously it's a very specific strategy. So obviously always difficult to, to answer that. And that's obviously the problem without knowing, where the user's got in, where the trader is looking obviously at the things that we're actually not privy to on that account,
I totally agree. I've streamed before on other sites, and the number of questions we get like that. We are not Harry Potter. We're not magicians. We don't know what the price action is going to do, except when the setup is right. So if we see a setup, then we feel we do know what the price is going to do. And then we have our predictions, and like any trader, we can be wrong, but we're right a lot more often than we're wrong. However, just walking into a situation, looking at it, the chances of it being ready and an actual setup that we would be comfortable predicting the future in are pretty slim. And these trades come along. How often do you get a sort of a daily trade come along? Well, in one pair, it might only happen once every 4 or 5 months. You've got 28 major pairs plus loads of minors to look at, so it's not like we hardly ever trade. And there's plenty of stuff we can do on the shorter time frames. It's just that today we're not really looking at it. And the other point I'd make about having streamed before is an awful lot of people say, what's your call on this? What's your call on that? And I used to make them, and I'll make them as a trader, staring at a chart, knowing the fundamentals, knowing this, knowing that, and I'll just give my bias. Not always right. Actually, I was right more than I was wrong, but at the same time, it's no real guide, is it? And that's what we're talking about, taking people to the next level. I mean, if you don't know your TP, for example, if you don't know what it is, then you probably shouldn't have got into the trade in the first place, because you wouldn't have been able to work out your risk reward, which is very important. And that's basic stuff that we're not really about teaching. So that's not to scare you off, for example, Iraq, who's saying that. You know, what's your TP? That's a perfectly reasonable question. It's just that we're kind of set up in a slightly different way. And while I'm happy to give a bias, you know, what are you going to do? Blame me if it goes wrong? So anyway, Lewis, any more you wanted to add?
Yeah, well, I think obviously kind of staying on that topic, Paul, I think obviously, you know, for me, as you mentioned with, you know, with one of the guys in the chat room, you know, he's obviously currently up 330 odd pips this morning, last conversation I had with him. I think obviously he's got in using, you know, this particular strategy. He's ridden obviously the 2 to 3 wave kind of up. He's obviously been able to sit with a nice profit to kind of, you know, fall into the 3 to 4 move back down. Obviously, with the forecasted move on the weekly, we're anticipating another 700 plus pips for him to take out. So I think in terms of a TP right now, if the NU is anything comparable to the EU, obviously I think we've just had the 4 move down, which obviously gives me confidence that the bias is actually still up.
Fantastic. I mean, we're going to end it there. I mean, if you're interested, go and look at the Discord server. There's loads of material on there you can get for absolutely nothing. And if you like that and want to go deeper, which is after all what we're here for, then just subscribe. Now, in terms of what we're going to be doing going forward, there will be a regular weekly free cast like this, a free stream on TradingView where we'll cover stuff. And a lot of people asked about crypto. So Lewis, I'm going to say next Monday, at Hobbs 2, we'll do some BTC analysis. Happy with that?
Yeah, perfect. Yeah,
brilliant.
Fine for me.
Okay, so guys, thank you very much for listening. It's been fun for us setting it up, and we'll see you next week. And obviously, we do streams on Discord, but they won't be necessarily on TradingView. So you would have to subscribe to see further streams this week. But we may pull another one in for TradingView this week. We'll just see how it goes. But we'll definitely do one on TradingView up us to next week. So until then, it's goodbye from me, and it's goodbye.
Yeah.
From
Cheers all.
Cheerio.
Thank you, Paul.